Hey folks, we continue to see this epic rotation out of companies like Tesla, speculations and SPACs going into things like JP Morgan and recovery stocks to a level that, well, is kind of balancing the whole market out. But is this truly the bubble bursting on speculation, or is this just a midterm sell-off before continued rallies into new highs? Well, luckily, Cathie Wood has been chiming in all day today over Bloomberg, CNBC, and I stole some clips here. We're going to listen to, I've kind of highlighted it, trimmed it down, so if you appreciate me doing this homework for you, hit that like button, folks. Let's zoom out here and get right into this.
I think that there is a very rapid rotation now into value stocks. We've seen energy up year to date 39%, financials up about 16%. Those are traditional value sectors. And so I think that's been part of the reason for ARK's setback. But if I could add a little perspective to this, this happened to us in the fourth quarter of 2016 as well. Right after President Trump was elected, the stock market took off because tax rates were going to go down and so forth. And so the market started pricing in a very strong cycle, which was correct. The worst thing that could have happened to us was another tech and telecom type bubble where the market narrowed so that only a few groups won. Right now, the market is broadening out, and we think in an underlying sense, the bull market is strengthening, and that will play to our benefit over the longer term.
So what Cathie is referring to here is that in the dot-com bubble, there weren't a lot of opportunities, and tech was just kind of becoming this nuanced idea that people were funneling into with all their investment dollars, but really, again, nowhere to go. Whereas now we live in a world where there's so much opportunity that this is just the market kind of balancing itself out. And she's saying the fact that money is rotating from tech into kind of more balanced value plays kind of broadens and cushions the entire market. But she is saying primarily that no, it is not like the telecom bubble, and this is probably just a midterm, balancing. But let's continue on.
Tesla specifically, which is now off 37% from the recent highs, is down another more than 5% today. Everyone wants to know what your new price target is, Cathie, because the last time you gave that price target, it seemed crazy to a lot of people, and then not so much when Tesla actually rocketed 700%. So where are you now on where that stock goes?
Well, we're about to publish, I'm hoping it's within a week or two, our new forecasts. Our confidence in Tesla has gone up for a number of reasons. One, it didn't lose share of the electric vehicle market when all of the traditional luxury brand names started bringing their own electric vehicles to market. Now, we expect it will lose share, but our expectation was that its share would go from 17% at the end of 2018 down to 11% as more electric vehicles were coming out. Instead, what happened? Its share moved up to more than 20% and roughly 80% in the U.S. market, 80% of electric vehicles. So that's the first source of confidence, market share up, not down. The second is autonomous. We believe that Elon Musk, who over the weekend tweeted out that he would offer, or Tesla would offer, full service driving to anyone who wanted it, saw an incredible burst in demand. So for him to be able to do that suggests to us that he's going to be able to show us the way to autonomous much faster than most analysts and investors expect. So the probability we have put on Tesla really winning the lion's share taxi network market in the United States also has gone up. So you might imagine the price targets have gone up considerably.
Now, this is some pretty incredible news, actually, because I keep hindering my whole Tesla thesis on the fact that self-driving doesn't exist. And I'm just waiting for that day that they're like, hey, guess what? Self-driving, full autonomy here is actually better than you driving your car. And now we can start approaching government regulatory issues and filings and trying to get this thing on the road and build out a taxi network. She did mention here and there on some other interviews as well about Tesla basically starting up, self-driving taxi network, just like an Uber sort of deal where people can just start already doing a driving thing and then hopefully adopt it into the full automation, but I think that would be really wise. I just think they're not in a rush. It's just going to be a capability that they're going to be able to do probably whenever they decide to. But the more it drops, actually, the better I'm feeling about it, guys. If Tesla falls off enough, I might have to consider buying it back for my own portfolio, because I mean, we're starting to see it dip to lows well below where I started selling out at. And as I do this great shifting of my own portfolio into a corporation, I'm debating on whether, maybe I re-add that as one of the spec plays, or maybe just keep it as part of the QQQ ETF. Who knows? But let's continue on, because there's a lot more interesting stuff going on here with Bitcoin, a few more Tesla points, and we'll finish up with where she thinks the market might be headed.
So what we saw in the tech and telecom bust was the recognition that we were not ready for prime time for a lot of the companies evolving at that time. And so there were a wave of bankruptcies, and the psychology became, many people thought that the internet was a figment of Wall Street's imagination and that no one would make any money off of it, and Amazon included. And the time period you're talking about, Wilfred, was when Amazon basically was saying, look, we will be as close to cash flow neutral as possible, but we are going to turn every revenue dollar we possibly can back into investing. That's how they won. But they did not show profitability, not any substantial profitability, but often losses for many, many years. They just believed that if they invested aggressively at that time, that they would win the lion's share of the online retail market. And that was absolutely right. I think Tesla has already passed through that phase of its life. It did invest aggressively, and it has on four metrics. It is leading the charge, so to speak. So battery technology costs lower than anyone else's out there, and will remain lower. Artificial intelligence chip, it designed its own. No one else has designed its own chip. This is analogous to Apple in the day. Cellular companies, Nokia, Ericsson, and Motorola, didn't see the future. Apple did, and yet it couldn't get Qualcomm or Intel to move quickly enough. It had to design its own chip. And of course, now Apple basically accounts for the lion's share of all the profits from smartphones in the world. We think this is going to happen also with Tesla. Maybe not worldwide, because we know China wants its own champion. But that AI chip that Tesla designed, our analyst said, was 4 years ahead of where NVIDIA was at the time. And this was a couple of years ago. They have more data collected than any other company by orders of magnitude, not just by any other company, but by all other companies out there, because the largest pool of data with the highest quality is going to win in the AI game. They have the largest pool of data. And finally, until very recently, Tesla was the only automobile manufacturer able to improve performance of its cars with over-the-air software updates.
So we can clearly see Cathie is highly bullish on Tesla, but this is why I love this lady so much here, folks, because she kind of is like, a cook or a chef of the stock market, let's say, because she's had decades of recognizing what future innovating companies have done in the past to get to where they are today. And they've done a great comparison to the dot-com bubble with, say, something even like Amazon that trended sideways for a very long period of time, but people just weren't understanding why Amazon was doing so well at innovating and they were going to capture this future. She saw the same thing with Apple, and she compares all of this wonderfully, and she says, look, Tesla still has the formula for this incredible future wealth. In fact, we believe that it's so well formulated, even beyond what we were expecting to this date, that we're going to come out with a new issuance on what we think about the company, and we're actually going to increase our price target, which will be coming out apparently in the next week or two, and we can get to see where they think Tesla's going to be sometime in the future, which is another reason for you Tesla bulls out there to be even more bullish, and it's going to be very entertaining here. So let's continue on and see what else Cathie has to say.
Bitcoin to any other asset class is the correlations have actually been very, very low over time. In fact, the highest correlation is between Bitcoin and real estate. Now, the IRS taxes Bitcoin as property, but I don't think that's the reason for this correlation. It just so happens it's that. So we think that as it becomes a better accepted new asset class, and we are seeing institutional movement into the space, and we're seeing the diversification of balance sheets from cash into Bitcoin. We do think it will behave, actually, I would say, more like the fixed income markets, believe it or not. If you think about bonds from this level, this idea of a 60-40 balanced portfolio is a bit problematic. We've been through a 40-year bull market in bonds. We would not be surprised to see this new asset class become a part of those percentages, maybe 60 equity, 20-20. So I actually think that might be the biggest surprise here.
So as many of you know, I got a love-hate relationship when it comes to Bitcoin. I don't like it. I don't hate it. I see the bull side. I see the bear side. But there's one thing I can recognize is that there is a grand shift happening with it, because you're getting the likes of every major financial disruptor out there is putting their hands in Bitcoin's pocket, or putting Bitcoin in the hands of their pocket, I should say. The likes of Elon Musk, Square, PayPal, Visa, all these companies are getting involved to a level where it's time to smarten up and just see the trend that is happening. Now, I am not bullish enough to make Bitcoin anywhere near a percentage weighting of 20, 30, whatever percent. But realistically, I got some capital for it. I've told you guys I've looked at Coinbase, and I as well consider this an option for my portfolio to a varying degree as part of my cash, or I'm going to call it my emergency fund. I don't think it's the wisest idea to just use all investments as an emergency fund, but when I'm looking for places to park cash, I'm going to have cash in US dollars, Canadian dollars, and it would make sense to obviously leave it in perhaps some Bitcoin as well, even if that's just a few $1,000s. I think in this kind of circumstance where we see this shift happening, I argue this with people that hate anything that is trending. I don't care if it's gold. And I actually, it's a good conversation here, guys. If you hate gold, if you hate Bitcoin, if you hate art, if you hate stocks, if you hate dividends, the realistic situation is you should just own all of them, because they all seem to be doing fine over a long period of time. And you really don't know what ones are going to come out on top. So it's better to own the ones that you're not as sure about to a smaller degree, and just own a lot more of what you are sure about. But at the end of the day, just really fascinating stuff. And I mean, it's nice to see that Cathie is touching base on the forefront of these very controversial investments. But let's continue on here.
But we do believe that the two of the biggest sectors that will be disrupted in the world today are the two that have been best performing this year: energy and financial services. So choose wisely and make sure you're on the right side of change. Make sure these companies are investing enough, have invested enough. So many companies simply leveraged up to buy back shares, and now they're facing this huge investment mandate. So make sure that you invest in those that will be the survivors. And we do think that the carnage is going to be pretty significant in both the energy and the financial services sector long term. Now, in a V-shaped recovery, and we think we're in a very strong recovery right now, they're going to do fine. They're going to do fine. And in fact, the yield curve is very wide by recent standards. So that should accrue to the benefit of financial services broadly. So we're not saying that this is a fake out short term, but we are saying long term, watch out.
So this is where my curiosity lies, because I'm not a fan of oil, and the financial sector is very interesting right now, but I'm curious to how bold this statement goes, because everyone says like you should be scared of the banks. The banks aren't going to be what the future is going to be. It's going to be Bitcoin or blockchain. And honestly, I don't know how that could possibly be true, because the financial service, the way it is kind of connected up when you're talking about major financial institutions, they're usually backed by governments, treasuries, Federal Reserves, and they come with a bunch of different aspects. Like when you're buying mortgages or real estate, I don't know how easy or adoptable that is from a bank to, say, a private institution that might not have the same backing by a treasury or a government, though we are seeing it with private companies like SoFi that are going to be coming on through the Chamath Palihapitiya's of the world's kind of SPACs, right? But the question is what kind of disruption is she talking about? Now, in the energy sector, it's apparent, right? Like electric cars, the fact that people are trying to diminish oil use. I get that. It's going to be a slow wean out over time. And like she's saying, eventually will be disrupted. But on the financial side, I feel like the banks can change things around because they already have the foothold, like myself. And even people I know that use the likes of Robinhood in the US likely have a JP Morgan or a Bank of America account. And I have multiple accounts here in Canada with Wealthsimple, Royal Bank, Bank of Nova Scotia. Heck, I'm using all of them here, folks. So I don't know what she means by like great disruption, and you got to be careful. I'll always keep my ears open, but I believe the banks are relatively good financially, and I do like owning the future of finance with things like PayPal. So I mean, it's an interesting topic that I'm going to pass the question off to you. What do you guys think about this great rotation from spec to value? Do you think this is going to cool off soon? Do you think we're going to see a rotation back around sooner or later? What are you buying? I'd love to hear about all of this in that comment section below, but stay cool, stay awesome, folks. And I look forward to catching you tomorrow.